In a world where financial markets move faster than ever, a new kind of intelligence is reshaping how decisions are made. Capital markets, where trillions of dollars are traded daily by hedge funds. Asset managers and investment banks have traditionally relied on human judgment, quantitative analysis, and rigid data systems to inform strategy and manage risk. But today, artificial intelligence is no longer just a buzzword. It is becoming a core part of how financial institutions generate insights, automate decisions, and capture opportunities at scale. In this video, we dive into a major development at the intersection of AI and finance. How Transient.AI, an advanced AI platform for capital markets, selected the Arango AI data platform to power explainable, real-time intelligence, and why this shift could define the future of financial decisions. For decades, capital markets have operated through layers of data systems: historical price feeds, risk models, trade execution platforms, and regulatory compliance engines. These systems often rely on siloed data sets with limited context, while traditional data architecture may have worked reasonably well for linear analysis, like evaluating a stock's historical performance or stress testing a portfolio under specific conditions. They struggle when it comes to understanding complex interrelationships in real time. This is especially true in today's markets, where thousands of variables from macroeconomic shifts to geopolitical events can influence price movements and risk exposure within milliseconds. At the same time, financial firms face mounting pressure to adopt AI tools that not only produce accurate predictions and recommendations, but are also transparent and governable. Investors, regulators, and internal risk teams demand clarity. They want to know why a model generated a particular insight and how that decision can be audited. Black box AI systems, which deliver accurate results but offer little transparency into how decisions were made, are increasingly unacceptable in institutional finance. Explainability and governance are now essential requirements, not optional features. Transient.AI is a relatively new entrant in the fintech landscape, founded in 2024 and based in New York City. The company's mission is ambitious: to build a declarative operating system tailored specifically for quantitative finance. That means providing financial institutions with tools that go beyond simple automation or prediction, tools capable of modeling intricate market relationships, reasoning over vast interconnected data sets, and generating insights that are both actionable and understandable. Unlike traditional analytic systems, Transient.AI's platform is designed to unify data ingestion, analysis, and decision logic under a coherent, explainable framework. Using advanced AI algorithms, quantitative researchers and portfolio managers can automate complex strategies while preserving full transparency over how those strategies are executed and why particular recommendations emerge. To power this vision, Transient.AI chose the Arango AI data platform as its underlying data infrastructure. Arango, known for its unified, multi-model data platform, provides a foundational layer that bridges multiple types of data, including graph, vector, and document models, into a single contextual system. In contrast to fragmented systems that force financial firms to build many separate pipelines and translation layers, Arango lets AI tools reason over deeply connected data within a unified context. At its core, Arango helps organizations preserve shared business, meaning throughout the data life. This means that from ingestion to analytics to AI, the relationships between data points, whether they are counterparties, risk factors, instruments, or market events, remain connected, consistent, and computable in real time. It's this capability that enables explainability and transparency in AI decisions, a requirement that is increasingly non-negotiable for institutional finance. AI models are powerful, but they are only as good as the data they use. In capital markets, data sets can be massive, diverse, and highly interconnected. For example, A simple trading decision might depend on information about the performance history of an asset class, relationships between correlated markets, counterparty credit risk, macroeconomic indicators, regulatory constraints, real-time news, and sentiment signals. Traditional data architectures often treat these data sets independently. They may use separate databases for time series data, risk models, trade logs, and external feeds. While this fragmentation can work for basic operations, it fails to support true AI reasoning, particularly when models need to understand dependencies and relationships across data. This is where unified contextual data platforms shine by bringing graph, vector, and document data into a shared context. AI systems can reason over relationships instead of just isolated facts. This enables models to answer questions like, what is the risk correlation between this asset and that one under changing market conditions? Or, how will a shift in global rates affect interconnected portfolios across regions? Without sacrificing explainability or audit. In the past, AI models were often evaluated based on raw performance. How accurate were their predictions? Today, institutional finance demands more. Models must be explainable. Explainability means that every recommendation, whether it's suggesting a trade, flagging a risk, or optimizing a portfolio, must be accompanied by a clear, understandable rationale. This requirement is not just a preference. It's increasingly enforced by internal risk teams, regulatory expectations, and investor oversight. Black box solutions, where outcomes are generated without insight into their decision paths, are risky. They can lead to unexpected behaviors, compliance issues, and ultimately financial loss. Explainability gives firms confidence that the AI systems driving strategies are not only correct, but trustworthy. By adopting Arango's AI data platform as its data infrastructure, Transient.AI gains several crucial advantages. First, it can unify contextual data models, meaning that financial entities, events, and relationships all live within a consistent, computable structure. Instead of forcing engineers to stitch together graph databases, factor stores, and document indexes, Arango provides a single, integrated platform that supports all of them. Second, this unified approach enables real-time reasoning for hedge funds and asset managers, where markets can swing in milliseconds. Real-time analysis isn't a luxury, it's a competitive necessity. Whether analyzing evolving counterparty risk, optimizing trade execution, or identifying emerging opportunities across correlated assets, AI systems need to react with both speed and understanding. Finally, the platform supports built-in explainability and audit. This means that every AI recommendation can be traced back through the data and decision logic that produced it, a critical capability for compliance, governance, and trust. The traditional landscape of financial data is fragmented. Systems are built around trade capture, risk engines, market feeds, client data, and research analytics, each operating in isolation. This fragments context and meaning, forcing analytical systems to translate or reconcile data manually. Not only is this inefficient, it creates risk. A unified data layer, like the one Arango provides, preserves shared context across the entire life cycle of data usage. When AI tools reason over this system, they don't just have access to raw numbers. They understand relationships. Relationships between instruments, counterparties, events, and risk drivers provide the meaning that drives better, more transparent decisions. Imagine a hedge fund monitoring an evolving global crisis. Rumors of central bank policy shifts emerge, commodity prices fluctuate, and currency markets ripple. In such an environment, decisions must be made quickly and with confidence. Real-time AI analytics can help traders understand which assets are most vulnerable, which sectors are poised to benefit, and where risk concentration is forming. With Arango's data platform powering the AI infrastructure, systems can analyze complex financial interdependencies in milliseconds. Models can simulate multiple scenarios, weigh trade-offs, and provide actions that are not only accurate but explainable, showing exactly which relationships led to each recommendation. In an environment where every click can represent millions of dollars, speed with insight is the new competitive edge. As AI becomes more deeply embedded in capital markets, regulators are watching closely. Firms that deploy explainable, auditable AI systems gain a compliance advantage. Regulators want to ensure that AI-driven decisions, whether about risk, capital allocation, or portfolio optimization, can be justified and traced. Incomplete or opaque AI models invite scrutiny, fines, and reputational damage. A platform that inherently supports explainability and governance is therefore not just beneficial, it's strategic. It allows firms to innovate without leaving themselves exposed to regulatory backlash or internal governance gaps. Explainability, once optional, has become essential in institutional finance, with infrastructure decisions now acting as key competitive forward-looking firms are investing heavily in AI foundations that prioritize context, speed, explainability, and governance. Transient.AI's choice of Arango reflects a broader trend in finance, the realization that data infrastructure matters as much as models themselves. Machine learning and generative AI can only do so much without the right foundation to support them. Looking ahead, we can expect AI data infrastructure to play a central role in capital markets. Firms that leverage unified, contextual platforms will gain deeper insights, faster execution, and better compliance postures. In contrast, legacy systems built on fragmented data may struggle to keep up with the pace of change. What's clear is this: AI isn't replacing market professionals, it's empowering them with tools that can reason, explain, and operate at a scale humans alone cannot achieve. The financial world is in the midst of an AI revolution, but the real battle isn't just about algorithms. It's about how data is structured, contextualized, and made understandable. Transient.AI's partnership with Arango highlights a fundamental shift toward explainable, transparent, and real-time AI systems that operate at institutional scale. In a market where milliseconds matter and clarity is required at every step, infrastructure that supports both speed and insight will define the future of intelligent finance.